Morning, Market Chameleons. Happy Friday, Dima.
Good morning, Will. How are you?
Great. Let's get right to the disclaimer.
Yep. Good morning, everyone. Thank you for joining us. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, contact your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's the disclaimer.
Great. What are you seeing this morning, buddy?
It started here. So we'll start out pre-market report. Take a look at what's coming up on the earnings front in the next 2 weeks. If you have any questions along the way, Will, let me know. I'll try to answer as many questions as we can before the end of the show. Of course, if we have time left over, I'll take a look at some bullish bearish ideas. Sound good?
Yep.
All right. So we're starting out with the pre-market report, taking a look at stocks that are trading in the pre-market hours. We have a list of the most active stocks, the biggest percentage gainers, biggest percentage decliners. I'm going to take a look at a more filtered list of stocks with a higher market cap of $20 billion or more. So I'm using this filter here, $20 billion. So we get a list here, 47 made the percentage gainers list, 5 on the percentage decliners list. So from that perspective, looks like a more bullish bias at the opening. We got a few here up top, up 10% FUTU. I'm just going to look at don't see what the headline news is on that, but that's trading 850,000 shares in the pre-market hours, up 10%. The only one, PLTR, sticks out because that's trading 11.5 million shares in the pre-market hours. I'm going to just take a look here. Looks like somebody took a stake in Palantir, so it's up on that news, up 7.4%. Is that the stock that's gotten hit recently, Will?
It's sold off after its earnings. Yeah, this is a relatively new issue. Yeah.
Size 45, now in the $27 range, but I think that one took a hit after earnings. But here it is, closed yesterday, $25.17, trading $27, almost $27 in the pre-market hours. That's up 7.2% from yesterday's close. You can see here big range in the last 52 weeks, $8.90, $45, as high as $45. This is the pre-market VWAP, 2681. So we're trading right next to that VWAP. 11.7 million shares trading in the pre-market hours. If we scroll down here, you could take a look at some of the headline news, see if that move is justified. But I'm just going to go really quickly just to see. I think it just reported. So this is its earnings history over here on this tab. I think it just reported right here, February 16th, before the market opened. We see it was down 12% that day. It hasn't been out to this. It's only its second earnings, right, since it IPO'd. So not a big history here to look at, but you could, let me just see its gap history really quickly. So this is its gap up history. The 12 largest gap moves within the last 3 years. And here we have the dates, the notes, any notes for that day. So if there is any kind of press release that day, headline news, if the market was up, we just make a quick note over here just to see what the catalyst could have been. But here are the opening gap moves. And on average, if we took the average of these 12, the average move was 5.8% at the open. So let's see how that compares to today's 7.2%. So that's 7.2%, a little bit above the average, but we could see here, this is the historical range, 8.7, as high as 8.7%, lows 4.1. So within that range, let's see what it tended to do after the opening. So We see historically a gap up at the opening. From the open to the high of the day, the average move was 6.4%. From the open to the low of the day, the average move was 6.9%. So they're almost even slightly more biased towards the downside. From the open to the close of the day, 67% of the time it drifted lower from the open, 33% of the time drifted higher for an average loss of 1.4%. So that's really quickly a price return distribution analysis after Palantir had a gap up opening historically within the last 3 years. So let me close that real quick. And I'm going to come to the unfiltered report. Unless you have questions, let me know, Will.
There was a question about a stock on the pre-market movers. I think it's VCNX. Early riser was asking about it.
VCNX. I don't see it here. Oh, right here, this second one. All right, I'll take a look at it. That's a lower cap stock, $57.6 million market cap, up 77% on 9 million shares. There is some news on here. So let me open that up. Before I do that, I did see there was some headline news on Uber and I think Facebook. So Uber looks like they're down. They're having, all these lawsuits actually globally, how to classify their the drivers. Are they employees or are they let me come back to the $20 billion. I think so. There we go. Uber down 2.1%. How do you classify Uber drivers? Are they Uber employees or are they independent contractors? And I think all these lawsuits going on. I think one in the UK right now looks like maybe it wasn't favorable to them. So keep an eye out on that, because I wonder if they start doing that, is it like a trickle down effect? Like then everybody else follows suit? Like if they lose one, is that like a trigger?
Well, remember they lost one in California, right? And they put a lot of money into with Lyft, and they were able to get it somewhat overturned specifically for them. They almost got to do all, it's not every company that, got the waiver, but it was Uber and Lyft in California. Because people
hold on, Will, you cut out. Hey, Will.
Services, but it was an expensive battle. And, for a little free company.
Hey, Will, you're cutting out.
You there?
I can't hear. Yeah, your screen is frozen. Will?
All right.
Okay, I can hear you. Yeah, it's better now.
All right. It was the internet connection. Sorry about that. Oh, well, it's just California. They were able to get it overturned, Uber and Lyft, through a vote with the population wanted it. So it's going to be a long battle. And I see Airbnb on the board. They're going to face the same thing. Communities around the country are trying to change the rental rules. I'm going through it in a place I have in the Poconos. I mean, it's got to be happening everywhere.
Right. So it's kind of like you see a lot big success in these companies, and then all of a sudden, you got like regulators now looking at it, seeing how to change it. Uber is interesting because I think it's more technology company. I don't know if they could just then change their model and lease out the technology to, other companies that just start up locally, right? and just hire and handle the hiring of those employees. Because really I think what they have is
I think that's what Uber Eats is, right?
Is that what Uber Eats does? Yeah. So they might be able to change their model.
Yeah.
Another one that I noticed, Facebook. Let's see how Facebook's doing, but let me see if it's on there. But I think they're also under pressure from certain, and again, it's not in America. It's starting out like globally, but I think it's starting in Canada, Australia, where they're saying that Facebook and maybe even Google should be paying for the content providers, should be paying the newspaper because they're using content on their platforms, should they be paying fees to those providers? You know, and I think that they're starting to do, you know, start battling on that front. So it'll be interesting to see, you know, how things like play out, because there are, you know, always these lawsuits going on, and it's important to know if you're invested in those companies, you know, it's important to know what's going on in the litigation on these things. But I think, like, you know, they've got already, and you know, I think it's in Australia and Canada, and now they're starting to, you know, Germany and France is also starting to look at that model and saying, should Facebook be paying fees to the content providers? Hey, Will, you there?
Yeah,
Will,
it's interesting. Yeah, I'm here.
Yeah, all right, so you're freezing out. So let's go back to the unfiltered report. You know, just wanted to mention that's something to keep in mind. If you're investing in stocks, always just take a look what's going on that regulation or litigation front. VCNX, that's somebody was asking about that. Let's take a look. So here it is. This is a biotech stock, closed at $2.87, trading $5.50 in the pre-market hours. That's up 91% from yesterday's close. VWAP price $5.04. You can see here the range in the pre-market, $2.85, $5.95, 11.5 million shares. So you could see here right there, must have had some news here, press release, and boom, you know, you got that gap up. And here I just kind of keep mentioning, because I get emails a lot of times, you know, start pre-market at 4 a.m., you know, keep in mind, like at 4 a.m., 5 a.m., you can put in a pre-market order, but you're not going to see the volume, really the volume, until it kicks in after 7 a.m., because that's when the press releases and the market makers are coming in, right? So you're putting in, if you're looking before that, you're like a sitting duck, you know, see here, that's where, you know, you're putting in limit orders. If you're putting in buy orders, you're not likely getting filled, right? Only on your sell orders on the way up like this. So keep in mind, yeah, there's pre-market, but 4 a.m., 5 a.m., you're probably, all you're doing is putting in a limit order and waiting for the news to hit, and you're going to get run over. And really, in general, in pre-market hours, it's already very liquid, like extremely liquid. And when you're trading in pre-market hours, you don't have the same price protections you do during market hours, you know, like trade through rules and so forth. Let me just take a look here. Looks like there's some headline news there. It's a biotech stock. You know, I'm going to let you read that and see if that move is justified. But let's take a look at it from a gap up history. So it's up 91% today in a pre-market. How does that compare to historical gap moves to the upside? And when it did gap up, what did it tend to do after the gap, right? So that's what we want to know. How does this compare to historicals, and what happened afterwards usually? So let's come down here. We're looking at the 12 largest gap moves in the last 3 years. These are the dates down here. Here, if there's a press release, you know, we put that as a note over here. You can read it. Headline news associated with this move. So here are the gap moves for those dates. On average, the gap was up 19%. So today, you know, that's way above the average, 91%. The range, I'm just going to come down here for the max and min. So 56.4% was the high before today, July 17th, you know, as low as 9%. So we're way above that, you know, above our high-low range historically, way above the average. So take a look at that. You know, I didn't open up that news to look at it. I'm just looking at it from a price action analysis. So this is what happened historically after the gap. So gapped up in the morning, what did it do the rest of the day? So from the open to the high of the day, we see average move up 5.9%. And here I'm seeing a couple times that the opening was the high, you know, went down after that. From the open to the low of the day, the average move was down 11.1%. So at least from a historical perspective, that enthusiasm at the open, you know, the bias was more towards the downside than upside. There wasn't much follow through. Again, you need to read that news today to see what's different. You know, I didn't read that. So take a look what's different. Maybe it's justified, but this is what historically happened. From the open to the close, it tended to move down more often than not. So the drift gapped up at the opening to the close of the day, 83% of the time drifted lower, 17% of the time drifted higher for an average loss of 6.8%. Okay, the volatility from the open to the close. So I'm going to convert all these to positive moves just to see the average percentage move, right? From the open up or down, what's the average percentage move during for that drift during the day? That's 9%, up or down 9%. So you could see historically a lot of volatility even after the opening. You got about another 9% up or down move. So that's really quickly VCNX, biotech stock. I'm not going to go read the news right now while we're on here, but I'll leave that up to you to go read it and see, you know, what's driving that move. Are there any other ones? Well,
nope, you can move on.
Okay, let's take a look. I'm going to take a look on the earnings front. So I went up, these are upcoming earnings in next 2 weeks. I'm going to use a filter here to look at stocks that trade on average 5,000 contracts or more per day, just to see filter out the more liquid stocks. And let's take a look at the full report next 2 weeks. So down here, this is the list of companies that meet the criteria above. And these are coming out, this one on Monday, February 22nd, before the market opens. Got a couple, and then after the market closes. So DISCA is Discovery?
Yeah, Discovery Network.
Okay, right. So right now, the straddle, so when we look at an option straddle, buying the call, buying the put, that's paying premium for the magnitude of the move in either direction. Okay, so we're looking at what is the straddle implying. So the straddle right now is implying a move of 13% in either direction, up or down after the company reports earnings. So how does that compare to historical earnings reactions? Okay, so what did the stock do historically after reporting earnings? So on average, in the last 4 quarters, the stock moved up or down on average 4.3%. In the last 12 quarters, the average move was 4.2%. So we could see here, comparing it to the 13%, what the options are implying now, options, that's 8.7% above the historical 4-quarter average move, 8.8% above the historical 12-quarter average move. The high move the stock that made after reporting earnings in the last 12 quarters was 12.1%. All right. So right now pricing in 13% move. Dish, that's in similar, right? Is that like also kind of like the Discovery Network?
Well, they're in the same space, but Discovery actually produces content. I think Dish delivers it.
Right. Okay. So similar, but not exactly the same. You know, the same, but they're both reporting earnings Monday before the market opens. Dish, straddle right now implying a move of 8.6% in either direction. In the last 4 quarters, the moves have been pretty muted, on average 0.9%. Looks like the last 12 quarters, the average move was 5%. So we could see here 7.7% above the 4-quarter average, 3.7% above the 12-quarter average. The high move on Dish after reporting earnings in the last 12 quarters, 14.5%. Okay. RCL, Royal Caribbean. Also Monday before the market opens. Straddles implied a move of 8.4%. That compares to a 4-quarter average move of 4% and a 12-quarter average move of 4.2%. So you see 4.3% above the 4-quarter average, 4.2% above the 12-quarter average. The high move on that stock after reporting earnings, 10% in the last 12 quarters. So that's looking Monday before the market opens. We got a bunch after the market closes as well. So we can wait on these to talk about them on Monday because we'll still have a full days of trading. Are there any questions on specific ones you got coming up, Will?
Let me take a quick look. There were no specific earnings ones that there were questions about.
Okay. Let's take a look at, I could do a couple more then, if you don't have questions coming up.
I've like DPZ, Domino's Pizza, I know they've had a big run because they're a stay-at-home play. Could we look into that deeper, what the straddles have done in the past, the history of the straddles, that type of thing?
All right. And I'll tell you, one of the things I'm looking, because I'm working on the fundamentals right now. So we're creating, more and more tools to start valuing, seeing where the valuations are versus historicals, where the earnings are growing, and I'm pretty much we're always bullish, right? Well, even when we're like somewhat bearish, we'll have like some bearish stuff on, but bullish stuff. Like I'm looking at these, I don't know, maybe I've been looking at these fundamentals for so long. I feel like everything right now is like so overvalued.
Well, there's a lot of money slushing around in the marketplace, and
yeah. I mean, I've never, everything I look at, I'm like, whoa, But I'm gonna probably hit on those starting next week because we're going to be pushing out some more tools for fundamental analysis. So we'll take a look at that next week. But let's take a look at DPZ. They're expected to report earnings. What is that? Tomorrow? I got to check that. But let's see what it did last time. So here's what it did last time. It reported October 8th, right? So it looks like so they missed by 29 cents based on the estimates, analyst estimates, but they beat on revenue. The stock was down 7% after the reporting earnings that day. Okay, so let me see. I'm not going to open up this press release right now because we don't have enough time. Let's see what it did since the last reported earnings. So this is looking at the drift after reported earnings. And why we look at that is we're trying to benchmark not what analysts are going to be expecting, but kind of like the optimism, pessimism, the traders going into this next earnings. So after the company reports earnings, remember we just looked at an earnings report, the traders, the stakeholders, they all get to analyze those new numbers. They listen to the management, what they're telling, what they're conveying about the future outlook, and they put that in their models, and they could reprice the stock really quickly, that day. So once it reprices, of course, there's about 3 months, right? If we take quarterly earnings, about 3 months until the next earnings report, the stock will drift based on the future expectations, what the outlook is coming to the next earnings. And when we take a look at the drift and compare it to historicals, it kind of gives us a gauge, are traders starting to feel more optimistic or less optimistic going into the next earnings. So let's take a look at what it did this last quarter. So since it reported earnings, it was down that day. After that, we're down another 5.8%. So it's down, so continued lower, down another 5.8%. Historically, in between earnings, on average, it gained 6.3%. So usually, on average, it drifted higher for an average gain of 6.3% in the last 12 quarters. The average move up or down in between quarters is plus or minus 5%. So this is kind of within a standard deviation, right? So we're like 1.2 standard deviations. So but obviously there's not a lot of optimism going into it, right? So whatever the traders are feeling, since the last report, the market is up, but this one, Domino's Pizza, down 5.8%. So this kind of gives us an idea how traders might be feeling heading into the earnings. Obviously, if they're doing really well, then there's more room to the upside, right? If you feel like, hey, Domino's Pizza, they're going to do well, people are, I didn't read the last report. I don't know what they said, but if people are maybe people are staying home ordering pizza. I don't know what's going on, but if you feel
that's exactly what's happening. It's called COVID-19 lockdown.
Yeah, you would think it would be okay for them, Domino's Pizza.
Yeah,
although the restaurants are opening back up, so people might be actually dining out again. I know here, people are back. They have indoor dining. They just started like 2 weeks ago. But here, just looking at what happened previously, before they reported earnings, they were down 7%. But before they reported, it drifted up 6% in between earnings. So obviously, they didn't like what the traders heard, and it was down 7% after that. And you could see here we had some big moves as well in between earnings. But if you want to just take a look at the history, for the drift and the reaction afterwards, you could come down here and look at it. This is more of a visual of the drift versus what happened after they reported. Let's take a look at the historical stock patterns for Domino's Pizza. So we see before earnings, it tended, the stock on average tended to gain, or increase in share price. So you could see here, starting 2 weeks on average gained 3.1%. And here you could see, so it did gain the 75% the time the day before it was higher, 25% of the time it was lower historically. Here it's kind of almost like a mixed bag. After reporting earnings, the day of, it looks like 75% of the time it opened lower, 25% higher. But we do have this, when it opened higher, look at that in February 20th, it was up 22%. So on average, gained 0.1%. If we take a look at the average opening gap, so if we took all these opening gaps and just wanted to see the magnitude of the move, what's the average magnitude of the move up or down, that's been on average 5.9%, and as high as 22% up here. After the opening, this is what it tended to do. From the open to the high of the day, average move 3.7% to the upside. From the open to the low of the day, average move was down 2.5%. So that here is just telling me a little bit more skewed towards the upside than downside. From the open to the close of the day, it's about 50-50. Half the time it was up, half the time it was lower, for an average gain of 0.3%. So that's really quickly a historical price return distribution in Domino's Pizza after reporting earnings.
That's great.
Yeah,
listen,
let me take a look.
I'm sorry.
Yeah.
Mike from Tyler, Texas. I hope everything's good down there, Mike. He's asking, when are the insider trading disclosures going to be available?
You mean the insider? I think he's referring to the insider trade screener.
Yeah.
Right. So there's one now. I'm still working on all these details as I'm doing the fundamentals. I'm also looking at this, but there's a lot of stuff going on in those insider trades that, to me, it looks like 98% of them you have to kind of clear out to get to like the more interesting ones, but I'm still like studying them because there's lots of stuff going on. Like these insider trades, a lot of them are just scheduled buy, scheduled sells, converting, converting warrants or grants or gifts, and some of them are moving money around. Some of them are just like, in something happening direct from husband to wife. So really, there's so much stuff going on. Like, just to get down to like the ones that matter, filtering it down, it's very difficult to do because you have to go through, out of 100, you got to like knock out 98 of them before you could get to the more interesting ones. They're not as clear cut, and I'm working on it, but not.
That was super helpful. That answered his question. Unfortunately, the last minute, your sound went underwater. So no worries. It's 9:30 now. Thanks for joining us, everyone. Any last words from Undersea?
Thanks, everyone, for joining us. Stay safe. Have a good trading day. Hope to see you guys on Monday.